We got a group of good-looking guys here. I think we're live, guys.
I just think Alan has too much hair.
I
I'm going
agree.
to say, yeah, we all may need to put on toupees or something for this, perhaps. So anyway, welcome everybody to Home Buying with Alan and Eric. I'm Alan.
And I'm Eric.
And we're
the home guys.
I think you want me to do it now, don't you?
I do. You're better at it. You've got the voice for it.
It's just the one beat, but that's okay. Whatever works. Anyway, we're happy to have everybody join us in this program, and thrilled to have Alan Mednick from the John Galt Agency with us today, talking about insurance and how important insurance is and some of the good ins and outs. So Alan, welcome to the program today.
It's a pleasure to be here. Thank you so much, guys, for having me.
And then, so Al, we've all known each other for a while, and let's kind of talk a little bit about what's going on in the insurance world. I know we're in hurricane season. Like, what are you seeing currently in the market that people should look out for, be cognizant of?
Well, obviously, everybody should look at their policies. That's the biggest thing that I've seen, whether we're in the situation that we're in right now or, it could be a year or two ago. I've seen a lot of mistakes, period, on policies. And that's one of the things that I look for when I review somebody. But going right now, obviously, right now we have a hurricane coming right now, or whatever you want to call it. So right now we're in a moratorium. But pretty much, things have gotten tough over the last couple of years, and there are a couple of reasons for it. And hopefully we see some easing up on the horizon. It might take a year or two down the road, but things are tough out there. So you want to make sure the first thing you do is always look over your policy, make sure you're covered properly. That would be my first. And you look for all the credits you could get, and we could go into what the credits are in the policy.
So Alan, could you give some pointers to our viewers on what they should be looking for in the homeowner's policy?
So obviously there's a bunch of different policies. Right now, it's a lot tougher. I mean, we have 50, 60 companies, whatever, out there doing insurance. When we run it through right now, we might only get one or two companies that come back with a quote, believe it or not. That's how tough it is. So when you're going to get an insurance policy, you got to realize that the insurance companies are looking at a lot of different things. You have some companies right now that won't insure houses if it's older than 2010. Some companies won't insure a house if it's older than 2005, 2002. Some go back to, 95. So that's one of the issues that we're having right now. So we take that into one consideration. The other consideration is, how old is your roof? They've gotten very strict on that right now. So there are companies out there for an asphalt shingle roof. If you have one that's over 10 years old, a lot of companies won't do it. They want you to replace the roof. Now, someone comes to me and they're like, the roof is good for 20 years. There's nothing wrong with my roof at all. The manufacturer says I have a warranty on it for this. Insurance companies don't care. They won't insure the roof if it's over 10 years, some companies. And then when you go to a tile roof, some companies are 10 years, some companies are 15 years, some companies are 18 years. So it varies. And again, when we're looking at the policy, those are the first questions I basically ask. So it's been getting tougher out there. There are places to go, and we try to search everywhere for the best premium basically out there.
So that raises a couple interesting points. Number one, the timing of when you should purchase your policy. And number two, based on the fact that you're saying there are 60 companies out there providing insurance, but you might only get quotes on 2. Can you explain why that is and why being proactive is really important?
So again, one of the factors that these companies look into is the demographics of your house, basically age of your house, roof, condition of the house, whether it's a framed house, whether it's masonry. Those are some of the basic characteristics that an insurance company will look at. But there's also a lot of companies out there that are just not insuring right now, taking on new business. They reach their capacity. So that's another reason why there are some companies that won't insure in Broward County, some won't insure in Miami. In Miami, and some in Palm Beach. It depends on the location you're at. So there's many different reasons for that. We're hoping that things will start loosening up We don't know how long it's going to be, but that's what we're waiting for.
So I have a question. Two things. You brought up a great point about the roof. There's a lot of times, because I'm looking at debt to income and all of that, and when I'm pre-approving somebody, I'm estimating a lot of times. So a lot of times, if it's a close debt to income ratio, I'll put on the pre-approval depending on age of the roof, because sometimes, yeah, I learned the hard way, and a policy came in much higher than they were pre-approved for the amount, but the house that they actually selected, it
Yeah.
was it was insurable, but it was very costly for them. Do you see? And I think Alan Jacobson, we have two Allens here, so getting a
Call
little
me Al. Make it easy.
Al. Do you see realtors, listing agents, and sellers? Are they getting quotes? I would love to see it from a lending point of view. And Alan, I don't know if you've seen this for your buyers, but when somebody's listing a house, they actually have an insurance quote. Is that something that's?
I have not seen that, but I think it's a great idea to do that. Or I think more importantly is for the agent that's representing the buyer to be very proactive very early on, like right from the beginning in the process, to get insurance quotes so that they are armed and ready, not all of a sudden worrying about it at the last minute.
Yeah, so I've actually done that where I've given, and again, it's generic quotes. It depends on a couple of factors, but I've actually been giving quotes to some of my clients that have been selling their houses, and looking for the realtor, and it helps them a lot, because I had one client last week. She was selling a house, and she was basically like, my roof was put on in 2006. Can you give me a quote to show that I could get insurance on this house, so realtors don't come to me and say, your house is uninsurable? That's one area of it. I've had it on the other hand. I've had where I've been working with the seller, with the buyers, and when the buyers go to the house, the seller of the house says, here, I have an insurance quote. Well, my problem is that insurance quote, or the insurance policy rather, that's not always binding. And what I mean by that is it depends on a lot of factors on the house. When you have a house that's over 20 years old, 30 years old, 40 years old, different things happen. Obviously, if when we have a house over 30, 40 years old, you need a 4-point inspection. You got to see what's on that 4-point inspection. The condition of the roof, condition of the pipes. There are different factors that go in there too.
Yeah.
So.
Absolutely. So what are your recommendations for homeowners as to how to best approach the insurance that they will be getting for a home that they're purchasing?
I'm sorry, what was it? I broke up a little bit.
What are your recommendations for the best approach for buyers to take when they are looking to buy a home in terms of insurance?
So, and again, it depends on the house that they're looking at. So lately I've been insuring houses everywhere from, had a house in 1926 that was a Spanish style house. I'm insuring a house right now that's it's in Wilton Manors in 1956, I think the house was. When I start looking at these houses, I start looking at the wind mitigation reports very closely. The wind mitigation report will tell you what the credits are going to be on the house. So one of the things I look at is, what's the roof attachment? So how are the trusses attached to the rafters of the roof? When you get the houses that are that old, a lot of times it's just by what's called toenail, basically a nail that's hammered in. Not the most effective way down here in Florida. Up north from Jersey, New York, it's done commonly, but down here, obviously a hurricane comes, could blow the roof off. So that's the worst type of credit. So if someone has what's called a toenail, to go from a toenail to a clip, you usually see it about $1,000 to $1,500 credit, typically. I mean, it varies with each company, but that's a really simple way to get your premium down. Typically, there's companies called retrofit companies out there where roofer companies will go into the attic. A lot of times when you have even a clip attachment, if the clip doesn't have the 3 nails in there, the required amount of nails, you'll also get that toenail credit. So by putting 1 extra nail in the clip, you actually could save yourself about $1,000, $1,500 on an average size house. So these retrofit companies will go out there, and for $800, $1,000, depending on the size of the house. On the house that I've been talking about, I just mentioned, a 1950 house. That was a pretty big house. That's like I think it was like a 4,000 square foot house. So that was going to cost about $2,000 to do. But to get that done, you're going to get that money back in the first year pretty much. And then
Right,
every year after that, you're saving.
Yeah, because you're not saying 1,000 to 1,500 one time. That's annual savings.
Correct. Yeah.
So
that's one way to say it. The other thing I look at is on the wind mitigation report is, the shutters. A lot of people won't get the credit for the shutters. So the first thing I do is look at the wind mitigation report. What is missing? What shutters are missing on the house? Is it because you don't have the front door covered? Is there a window in the front door? There are simple ways to rectify that. So I'll go over all these different things with my clients and say, these are the ways that we could save you money. Sometimes there's nothing you could do. You just shop it out. One thing I don't like to do is I don't like to cut coverage to get premium savings. I like the people to understand what their policies are, what's involved with the policies. If they want to cut something, I go over it with them and they could decide what it is. But I'm not the type that will cut coverages just to lower the premium.
So Alan, you can, that's awesome. Someone could buy a house that doesn't have the credits, but then they could do the upgrades after the purchase. And then would it be a year that they would be able to reapply for a lower premium, or would they be able to do that?
No, that's a phenomenal question. So the first thing is as soon as the changes are done, basically when the retrofit is done, when the shutters are put on, you get an inspector out to the house. When the inspector does the inspection and puts them on either the 4-point or the wind mitigation report, it's the wind mitigation report. The date that wind mitigation report is done is when you could get the credit from.
Awesome. Yeah, that's great information, especially for people looking to come down and renovate, or you bite, so to speak, bite the bullet for a little bit on a little bit higher, but then do the retrofit, do all those. That's awesome.
Yeah. Can you explain to our viewers what the wind mitigation report is?
So there are basically 2 inspection reports that you need when you're buying a house. There's either, if the house is, like I mentioned before, either over 30 or 40 years old, depending on the company, you need a 4-point inspection. That's more to be eligible for the house. That's a requirement. You have to have that if the house is at a certain age. The wind mitigation report is more of an optional credit for the insurance companies, optional inspection report. But for you, it's a mandatory one just because it's the way you get your premiums down. So the inspection report will tell you several different factors on a wind mitigation report. It'll tell you basically how strong your roof is, how strong the house is to a hurricane. So again, first of all, if the roof, they go by what the roof was. So after 2002 was the new codes were put in. So if you have a house after 2002, you get what's called the Florida Building Code credit, because they know that your house, the roof should have been put on up to code to withstand, hopefully, hurricanes, that we're going to be getting. Yeah. And then it'll tell you other factors. Like I told you before, the attachment, the way the trusses are to the rafter, the way the roof is on the house, which is either toenail, clip, or single wrap. Those are basically the 3 common ways that a roof could be attached to the house. And it'll also tell you about the opening protection, like I told you before, if the shutters, if the windows or the glazed openings are covered by Miami-Dade approved shutters. Now, people out there might have, they say I have plywood over their windows, or I have, shutters from the 1960s on my windows. It has to say Miami-Dade approved to get that credit. And I will throw one other thing in, because I get this question a lot. I have shutters on my house. If I put impact windows on it, will I get a bigger credit? And the answer to that is no. Whether you have shutters, metal shutters on the windows, accordion shutters, if they're both Miami-Dade approved, or impact windows, as long as it's Miami-Dade approved, the credit is the same.
That's interesting.
So you have just displayed when I'm working with my buyers and they're like, oh, I'm just going to shop online. I'm just going to go to plug into my keyboard. This is just strengthens the reason to work with a local professional. You're right here. You're in South Florida. You know the hurricane season. You just gave me more information, and I've been in the business a long time that I know about insurance. So that just solidifies why you want to work with a.
Yeah, I mean, I've had clients that I've worked with that were referred to me, and I looked at their policy, and this just happened to me last week, and I've had a bunch of this where I'll look at their policy, and this is a person that was up in the Claremont area, and I looked at their premium, and their premium they were paying $5,000 a year for, and I've done other people in that area and other people like 1,300. I'm like, what's going on here? Take a look at it. First instinct is obviously the credits aren't applied properly. So I looked into his policy more. He never had a wind mitigation. His other agent never had one done for him. So I got the wind mitigation done for, he got it done. We applied it. He saved $3,000 right there off the bat. Now, I've done this in previous years where actually the client had the wind mitigation report done and it still was never applied by their current agent. So at that point, what I did was I was able to take that report, send it into their insurance company and get them retro credits back where they saved, $3,000-$4,000 and get them that money back. So that's why it's so important to take a look at those things. So to have an agent that, that you could rely on, that, is doing the right thing for you is one thing. Then you get to the other side of it too. And obviously when something happens, you want to make sure somebody's there. I mean, people call me literally. I had a call this morning at 6:45 this morning. I take calls all the time. I shouldn't say that out loud, but whatever. But I always tell people, weekends, nights, holidays, call me. I mean, I'm there for you. And if there's something going on, I can't talk, I'll just tell you, I got to call you back. But the most important things also are claims. And when you get those claims, I could tell you horror stories with people going through that. And that's one of the reasons why we're in the situation we're in right now with where the rates are and why the insurance companies are so tight, is because a lot of things that have been going on in the past, a lot of lawsuits, which there were some laws that were changed as of July 1st, where basically roofers are not allowed to solicit anymore for business, to say that roofers are not allowed to represent the insured to the property owner to the insurance company. So they can't talk directly to the insurance company anymore. The roofers have to supply a quote now. They have to supply a contract now. So there's a very strict way that they have to go about things. And I believe it's a pretty hefty fine. If I remember right, it's about $10,000 fine if they don't follow those steps. So there's a lot of things that have been going on. Hopefully they're going to rectify the situation we're in with insurance.
So talking about claims, if a house has a previous claim on it, will that affect the person buying? Let's say a house had water damage and the seller put a claim in. Will that affect the buyer?
It could. So it depends on the company you go to. Companies look at claims in a couple of different ways. They either look at the actual property that you're insuring, or they'll look at the person that is owning the property, or they'll look at both. So good examples, I have a client that's moving here from Colorado, and he's obviously the property that he's buying had no claims at all, ever. His properties that even was a rental property up in Colorado had 2 water claims in the last year. Pipes froze. Okay. And my argument to the insurance company was like, well, pipes aren't going to freeze down here in Florida. But anyway, so he had over $100,000 because the pipes froze up there. And he had another claim. I think the water heater broke. There actually, a bunch of the companies would not insure him, would not cover him because of those claims up there in Colorado. So there's that. There's the other thing where, if the property you're buying had a claim on it, some insurance companies, even though it wasn't you that owned the property at the time, they won't take that either. So it depends on the company. And by the way, water claims are the #1 claim in Florida for So that's why they're very strict, insurance companies, when it comes to water claims. A lot is the pipes broken in the walls. A lot, even with the air conditioners, you have got to have an air conditioner and the drain clogs up, and then all of a sudden it overflows and the overflow valve doesn't work and then starts dripping, things like that.
Things that we didn't deal with back in our neck of the woods.
No, not up north. Not up north. Water seems to be different up there.
Yeah, it's it freezes. That's
So we all know that there are a lot of hurricanes here, and we never know when they're going to come through or not. And there's always a debate about flood insurance, whether you should get it or not, whether you're in a flood zone or not. And if you're not in a flood zone, should you get flood insurance?
Okay. First of all, I just want to set the record straight. First of all, we're Florida. It's all a flood zone. Okay. And I'm serious on that because you have different flood zones. The major one is obviously an A, which is the mandatory basically. But even if you're in what's called an X zone, it's a zone. X zone is basically not mandatory to have flood insurance. So, Eric, you're doing your mortgages, you do your search on it, all of a sudden you come up with an X zone. Okay, no problem. You don't have to get flood insurance. We're not requiring you. But it still is a zone. It just means that the likelihood that the area will flood is like 1,000 years or whatever it was. So that's all it is. Do I recommend it? Of course, I recommend flood insurance for everybody. Obviously, when you're doing an X zone, the premiums are going to probably be a lot cheaper. It's a lot easier to get. You don't have to worry about the elevation certificates. But yeah, I mean, obviously, we always recommend flood insurance.
I love how you set the record straight.
Well, and again, the thing the one thing I want to also, the one thing I also want to say is a lot of people don't realize that homeowners insurance does not cover flood insurance. Now, there are some options, the endorsements that you could put on a homeowner's policy to add flood insurance, but typically homeowners insurance does not cover flood. What is the difference? The difference is flood has to be from the ground coming into the house, and it has to be 2 or more properties or 2 or more acres. So if you just have water coming in off the street, if you left your hose on and water's coming in off the street, that's not a flood. Okay. If you have a huge water tower that comes down and floods, you and your neighbor's property and everything, then you got a flood going on. But yeah, that's what the difference is. So
it sounds like the water hose example that you actually came across that at one point.
Actually, I just thought of that one now. So. I was trying to come up with some example. That's the only one I can think of.
That's good stuff.
Yeah, I'm washing my car and water gets in.
Nice. Well, Al, that's all the questions I have. I'm grateful to have someone like you, and you especially, that I can pick up the phone, because I don't know any of this stuff. I just know what the policy is, how it affects the debt to income ratio, and if they qualify. So super grateful for your time that you spent with us today.
I appreciate it. The one comment that I'll always make is I don't want any of my clients to be an expert where they have to go out and sell insurance or anything. I do want people to understand what kind of coverages they have and, know that they could choose. Basically, the only coverage that I'm going to set forth for them is what's called the coverage A, dwelling coverage, which is basically the coverage that says this is how much you need to rebuild your house if it was a total disaster. That's the coverage that I come up with through what's called a replacement cost estimator. And again, that's the only one that is pretty much indisputable. We're not going to negotiate with that one. What I am going to talk to you about is your other structures, your personal property, even your liability. Those are the type of numbers that we could talk together, because those are percentages that go off of that coverage A. But your personal property, do you need 50%? Like if you have a $400,000 rebuild cost on your house, is $200,000 too much for you? Is that enough for you? Do you need that? Do you want to go down to 100,000? And if you could see, that's 50% of coverage A or 25% of coverage A. Those are the things that I want to talk to you about. Those are the things that I want to say, that's up to you. That's something that we got to discuss, and, there's more that goes into it than just saying, here's your piece of paper. Just because someone that says insurance written across it doesn't mean they have insurance.
Well, I have to say, to add on to what Eric said, that, he and I are in the business. I'm in real estate, he's in mortgages. We know a lot about insurance, but we don't know a lot about insurance. And you definitely have given us a lot of great information we didn't know before. So thank you for that. And thank you for joining us today. Really happy about this.
Yeah, I really appreciate it, guys. You guys are the best. Thank you so much.
Thank you.
All right, everybody.
All right, see everyone next week.